Welcome to the Two Wealth Show, a show that shares how you can create real wealth for you and your family. I'm one of your hosts, Justin Bogard, and my co-host is Elizabeth Sickles, aka Super E. I am a real estate note investor, specializing in performing residential real estate debt. I find the deals, acquire them for my own portfolio, as well as educate investors while walking them through the process of owning a real estate note. My co-host Super E, a real estate investor, specializing in short-term rentals and the management of them. She connects investors with short-term tenants and manages everything in between. Our show is sponsored by Bright Path Notes and Elizabeth Mayora. You can find out more information by visiting our websites at brightpathnotes.com and elizabethmayora.com. Welcome to episode number 8. Hi, Super E. How's it going?
It's going great. How are you today?
I'm doing great. The sun is out. It's not raining. It's not cold. We got a great guest speaker today. I'm excited.
Excellent. Well, let's bring him on.
So today's topic is going to be focused around retirement accounts. And Elizabeth, I know you have retirement accounts, and so do I. And we have them in the self-directed space to where we can choose the direction of where we want to invest our retirement account. And I know, Super E, you do real estate. I do as well. And that's where we choose to do our retirement. So without further ado, we have Mr. Jason DeBono as our guest today. He is the president of New View Trust Company. Jason, welcome to the Two Wealth Show podcast.
Hey, Justin. Hey, Elizabeth.
Hello.
How are you guys?
We're doing well. I'm digging that mahi-mahi in the background you got behind you, Jason.
Well, thank you. It's one of the perks of being in Florida is we can get out most times of the year and chase them down. And it's a lot of fun and certainly a passion of mine.
You know, a little side note, I had been on a deep sea fishing small boat one time in the past, and someone on our boat had caught a mahi-mahi. And when they caught this fish, it was, way out there. I want to say a couple hundred yards out there. And this thing was like flapping around in the air when it was jumping, and it had this weird shape to it. And those of you that aren't on the video cast on this right now, you won't be able to see what I'm talking about, but it has this like dull bull head to it. I'm like, what the heck is that? That's some sort of monster or something out there. So I didn't know what a mahi-mahi was. When I saw it, it's a very distinguishable fish now that I see, and it tastes pretty good too.
It is, and kind of fun fact on the mahi, while it goes by mahi-mahi dorado dolphin, so it has a bunch of different names. It's the fastest growing fish in the sea.
Really?
So, yeah, and they're just one of the most aggressive eaters. So it's such a great fish to catch because they're so plentiful. You're not worried about catching too many and losing population. They multiply literally by the second. So it's great to catch a fun sport fish that's great to eat, right? So I enjoy them, and they're definitely worth the effort and energy to go try to catch them.
Awesome. Well, Jason, thanks for being on our show today. Obviously, we're centering this around retirement accounts. I have a question for you. How did you get into the retirement account space to be involved with New View Trust?
Man, I'll try to keep it short. It really revolves around the fact that Dad said you can't do it, is the moral of the story.
Yeah.
I was in college. I was going to school for marketing, and I was working in a department store, and I was looking for kind of real work my last semester of college. So I went to an internship fair, and I met New View, and it was kind of a weird company, right? I mean, there was Enterprise and Callaway and every other kind of name that recruits to the colleges. And then there was this little company that didn't have much of a line. And I kind of went over and said, what do you do? And it was way over my head. So
right.
I was fortunate to get an interview, called my dad. And my dad's a casual real estate investor. He's probably owned 6 or 8 properties that he's invested into rentals. And so when I called him, he's like, well, you can't do that in an IRA. And I thought, what do you mean you can't do that in an IRA? He's like, yeah, you can't buy real estate in an IRA. I'm like, well, I'm interviewing with a company tomorrow, Dad, that said this is what they do, So when I went through the interview process, it was more of an educational event, and it was really my dad's reaction that caused me to take the job. We were tiny at the time, as employee number 3.
Oh, wow.
And we were really trying to help educate people like my dad that, hey, guess what? Real estate is an option in an IRA, no matter what Schwab or Fidelity tells you. just because they don't do it doesn't mean you can't. And it would be no different than walking into McDonald's, and because they don't sell you tacos, thinking that there's no such thing as Taco Bell or Del Taco or, any other group. And I think that's changed a lot in the 16 years I've been doing this. It's not everyday practice, but it's certainly becoming a lot more common.
That's awesome. So Dad said no. Jason said, why not? I like what you said about, your dad was in real estate and he had no idea that you can invest your retirement money in this stuff. Because that's the exact same thing that I ran into when I first got into real estate. I was like, oh, this is even better now, right? And people that I talk to are just like, wait a minute, you can buy that stuff with your 401k? I'm like, yeah. Like, what? But my custodian said, I'm like, well, you got it with the wrong custodian. It's like, you got to push it to a self-directed company. So let's talk about for a minute, if you will, Elizabeth, you jump in with the next question, but I kind of want to find out for our audience that isn't familiar with what we're talking about. Can we jump in and step back a little bit and to talk about what is a self-directed IRA or self-directed company?
Yeah, great question, because I think sometimes it's easy to kind of lump IRAs as IRAs, and really an IRA is a tool that the IRS gives. It's a tax advantage tool. That in and of itself is part A. Part B is really, what do you invest the IRA into? And, we've all been kind of grown into the idea that banks and brokerage houses keep your IRA, and therefore you invest your IRA in whatever they tell you is available, i.e. stocks, bonds, mutual funds. The reality is really IRAs and investments are completely separate, and they're not married together. And so what people are starting to realize is there are a group of custodians, right? We call ourselves self-directed custodians, but there's a group of custodians, still a small number of us, that allow you to invest your IRA into non-public assets. So we kind of use the phrase, it's like investing your retirement account into Main Street, not Wall Street. So right. We are a custodian like a Schwab, a Fidelity, a bank. We operate under state regulated trust charter. So we go through a lot of the same process, but we're just willing to hold investments outside the market, predominantly real estate, private notes, and private equity, whereas the brokerage firms that typically hold these accounts are not. And it doesn't make them bad, just like it's not bad for McDonald's to not sell you a taco, right? We just know that we go to McDonald's for a burger, we go to Taco Bell for a taco. So I think you get the idea there, but hopefully that gives an idea of what a self-directed custodian kind of is and what makes us unique.
And Jason, just to piggyback on that, why would people want to do real estate in a self-directed IRA versus just doing real estate kind of the normal way? What are the advantages? Yeah,
I think there's two ways to look at the why. The first one is and I'm going to not sidestep your question, but I'm just going to the first question is, why would you buy real estate instead of stocks and bonds? Because if you already have an IRA today, that's likely what you own. So you're going to have to move out of stocks and move into real estate. The reason that most people do that is because they don't want to be in the market. And we're in hopefully the tail end of a pandemic. But if you look at the market, it's disjoined from reality. It's no different than going to Vegas. You might as well just take your chips, put them on the roulette table or the blackjack table, because you have no control over the outcome. And the stock market wasn't always that way. You used to be able to look at some fundamentals, price earning ratios, and kind of see value. The world today values Tesla with $300 million of net profit in a very confusing accounting approach as being worth more than Walmart with over $100 billion of net profit. I mean, it's not even in the same zip code, but the market says Tesla's worth more. There's no way to make money for the average investor unless you truly time it right and hold it for the right amount of time, and that's too hard. So most people move to real estate because they see it, they touch it, they feel it. They know that they can buy it for $200,000 and rent it for $1,700. They know that if they rent it for 8 out of 12 months, this is what they make. If their expenses are low, and this is what the nightly rental is, the weekly, the monthly. You can do that math on the back of a napkin, and while it's not easy, it's a lot easier for the lay investor. To go back to your question, Super-E, really around why real estate in an IRA versus real estate outside, if you've decided that you like real estate better than stocks, then self-direction is right for you. If you like real estate in your IRA and outside, then really it's an investment by investment. And the beauty of IRAs is they're tax deferred. So you get to pick the investment that you think not only is best, but also that may provide you the best tax return. So if you were to go buy something, let's say make an investment today that you thought you could flip in 6 to 8 months, if you do that in your personal name, you're going to add it to your ordinary income or capital gains tax for the year, which may chew up 20, 30, 35% of your profit.
Right.
If you bought that same investment in your IRA, 100% of your profit will remain tax-free. So it's really a tax play or it's an asset class play.
Jason, what I like about what I learned when I got into having my retirement accounts with self-directed company like New View Trust. And by the way, your website, for those of you listening and didn't catch the video part of this, is NuView, NuView trust.com, NuViewTrust.com. Check out their website. They got great information and content, even a blog page. But what I'm getting at is the Coverdale Educational Savings Account was a game changer for me too. Because when I realized that not only could I use retirement money for it, but I could use like in Indiana, we have a college 529 account just to put in traditional, stocks and stuff like that. And I didn't know that you could use not only your retirement account, but you can also use a Coverdale account for your kids' college, and you can put it in private notes. You can put in real estate and stuff. So can you touch on that a little bit?
Yeah, that one, that account is a game changer for those that have kids or grandkids, nieces, nephews that you want to kind of provide some support towards their education. I think what it boils down to, Justin, is people don't really understand what taxes are and how they work. Because if we did, we would be tripping over ourselves to get into IRAs. The reason I say that is because when we really think about it, people can invest to make money or to build wealth. And if you invest to make money, then all you focus on is return, right? How do I put the least amount of money in, get the most amount of money out, and then celebrate? What most wealthy people understand is that investment is a byproduct of how much of your return you get to keep. And there's a lot of wealthy people that will make less money in more tax efficient strategies. And I'm going to give you just a quick highlight on how important taxes are in your life and how much impact they have. So I'm going to use Justin and I'll use Super E as my test cases here. So Justin has $1, Super E has $1. So on all accounts, they're the same, right? Mm-hmm. They both have an investment that's 20 years in length. So again, both the same. Both of those investments are going to double every year. So again, they're both the same. So same dollar, same investment return, same time period. Justin takes that dollar out of his personal name and makes the investment. 20 years from now, Justin's going to have about $78,000. Now, everyone's going to go, wow, that's incredible. You turned $1 into $78,000. But because Justin did that in his personal name, he paid 25% tax on his profit year over year. Well, he doesn't think about that. He just thinks about $1 became 78 grand. And so Justin and his circle of influence are all high-fiving, sitting around at the bar going, man, that was great.
I'm a genius.
Yeah, I look like I'm brilliant. Super E took the same dollar for the same time period in the same investment, but she, because she understands that wealth is a byproduct of return and tax benefit, she put the dollar in a Roth IRA or a Coverdale or any other account. She took the same dollar, same time period, but she wasn't subject to the 25% tax annually. Super E, 20 years from now, is going to be sitting around at a much nicer venue, drinking much higher, much more expensive top shelf liquor because she turned her dollar into just over $1 million. So I want everyone to kind of understand that as we get so wrapped up in the investment and the return. I want to buy this because it makes money. I want to buy this because it makes money, that we don't pause and say, I want to do that, but what if I just stopped and found a better vehicle? So to your point, the Coverdale, the Roth IRA, these accounts that exist, they're not investments, they're vehicles. But they're vehicles that are like supercharged because they're, think of them like an electric vehicle. I mean, they just get better efficiency out of the same investments. So we're not teaching people how to be better investors. You guys are doing that. What we're teaching people is how to keep more of what they earn by focusing on true wealth building, which is return and how much you keep, not just how much money do I make on this deal? How much money do I make on this deal? So the Coverdale is an amazing tool because it's a tax-free way to pay for your kids' education. And it's a way for you to go out and buy investments that you guys know way more about than I do, but in a vehicle that's going to just supercharge your returns to the tune of $1 million versus $78,000 for the same dollar, same investment, same time horizon.
That was an excellent explanation of what it is. And it doesn't surprise me. Super E is much more brilliant than I am. So I see why she made $1 million after 20 years. And I had 78 grand go, yeah, buddy, I could afford a Corvette maybe right now.
But with a name like Super E, it made it easy for me to decide who was going to be the one with the smarter one of the two.
I know. She's always running into the good luck.
Trying. And, Jason, there are a lot of IRA companies. I mean, it's not a lot, but it's becoming more popular. So can you tell our listeners what is the advantage with NuView Trust?
Yeah, I mean, I think like any business, we're not the only ones in this game, and it wouldn't be good for consumers if we were. In fact, when I started in 2005, there were very few, and I actually think the industry is significantly better today, and we're busier today, even though there's probably 30 companies in this space. So we love good, healthy competition. It challenges us and reminds us to get better every day, and it also helps educate more people that it's an option. So the whys of NuView Trust. I mean, we're almost $2 billion of assets. We've got 18 years of experience. We are a publicly state chartered trust company. Not everyone in this space is regulated in that manner. That's really the highest level of regulation in our industry. So that's certainly important. But what it really boils down to, I think, are two things. It's accessibility and education. Most people that come to us don't know what we do. They don't know the ins and outs, the nuances, the rules, the regulations. So finding someone on the internet that doesn't do a whole lot, but they charge $50 less a year seems great until you really need to get help and understanding of, hey, this is the deal. It's complex. I'm trying to do this with this person. Is that? So having that accessibility, which is being able to reach us, we're not hiding behind a screen or hiding behind the internet. We have a full team of experts here that are ready to help. But the second part is education. We pride ourselves on that. We do a lot of these programs because we want to partner off with what we feel is good education already in the marketplace, people that are already listening to your podcasts and episodes because they want to be in the know. And so this is just additional content. But we're always finding new ways to educate, bringing in new bits of content. And I'd say that's probably the biggest differentiator between us and the other available companies out in the marketplace.
Well, if I can, Jason, kind of brag on you a little bit. I have been to many different real estate conferences over the last 5 or 6 years, and I've heard several different IRA companies talk with their national speakers and stuff. And you by far have stood out over any of the speakers that I've heard. And your explanations on how the retirement account works and the different type of retirement accounts and how you dumb it down to someone as simple as me that can understand it and flow through it, like your dollar-to-dollar comparison where Super E's, a millionaire compared to me, is a great example of how you get up on stage and you educate. So when I saw you, I think it was last year, I saw you speak in LA at a conference, and I had told Super E, I was like, you got to listen to this guy. You got to get involved with NuView Trust because they really know what they're talking about. And you talked about how much education you put out, which makes you guys one of your differentiators compared to other companies out there that are the same trust level that you are. You're right. You guys have a lot of information. You have a webinar, I believe, once a week, right, that you do. And then you have quarterly and annual events that you do. So you put a ton of content out there. So I just, commend you on what you guys have done and commend you personally as to how well that you speak about the retirement space just to get more people to understand, like your dad, what we talked about at the beginning, that you can do this stuff in your retirement account. And it is absolutely a mind-boggling idea that you're going, oh my goodness, like everything in your life changes when you consider investing in real estate in your retirement account.
Well, I appreciate those kind words, Justin. And we do. We've got a great team here that does. We emphasize content and we have to remind ourselves, 16 years ago when I started, I didn't know the first thing. And sometimes experience can unfortunately be a deterrent to education because it inside and out. And we have to remind ourselves that most people that come to us don't know much about it, if anything at all. And so we really do try to start from ground level. And if we can accelerate quick into the advanced stuff, great. And if we've got to, slow play our way into kind of walking a little bit before we start crawling, we try to produce content for all facets and walks. And that's the beauty of self-direction. People enter it in different phases. You don't have to be level expert to do it. And it's okay to be level novice, right? There's no right way to self-direct so long as you're evaluating what your options are in the marketplace.
Yeah, that's a good point you bring up. When you were speaking, I was thinking about it was Colonel Sanders when he had first had the KFC franchise. He really didn't get it going until I believe it was late 60s when he finally got it going. So that just attests to, like, you're never too old or too young to invest or in your retirement account. And I would say, even if you haven't discovered the retirement accounts, just because you're 50 or 60 years old doesn't mean you shouldn't try to put it in a self-directed account. There's tons of advantages that you can do that I know we don't even have time to touch on all the aspects of self-directed. So speaking of that, to kind of clue in on New View Trust, besides your website, is there other places that you would like to direct our viewing and our listening audience to go to get more information about New View Trust and how they can learn more about this, and specifically how they can get an application to have an account with you?
Yeah, I mean, the website is going to be the best starting point.
Okay.
There's some branches will go off of there. I mean, we have a YouTube channel. We have some other, educational platforms, just depending on how you like your education to be delivered. Certainly in kind of the pandemic environment we're in, we've obviously done the vast majority of everything has been digital, although, we're excited to kind of start. We've started attending some events and we're looking at the possibility of hosting our own event, which, almost seems crazy that we have to talk about hosting a live event as if it's,
right.
Some sort of prehistoric, animal. But that is the reality, and we have to adjust and adapt just like everyone else in this, not just business, but in the world. So, take a look at the website, get acclimated there. There's a blog section. I know, Justin, you've done some content for us, and that can be found on there as well. So, I would say we try to split it about 50% of our own content. And then we try to bring in people from the marketplace that can just touch on the stuff that we really aren't, experts on. We're experts on IRAs. We're experts on how they work, self-direction, but we're not experts on investing. And, you guys do a great job of educating the listeners on what investments are out there and how do you look at them, see them, and evaluate them. And that's the hardest part of self-direction. What we do is easy. If you want to self-direct, we can help you do it. Yeah. But what we can't help you with is what to buy. And so, use us as a good resource to feel comfortable, but continue to use shows like this to help you get comfortable with the actual investment side and strategy.
Absolutely. Super. We got time for one last question.
Okay, so this might be a really dumb question, but can you have
You're the millionaire. You can't have a dumb question. I'm the dumb one, right?
Can you put your personal property, so your homestead, in an IRA?
Great question. Short answer, no. And it really goes back to why you're a millionaire and why Justin's only got 78 grand. The IRS, they fence off IRAs because they're tax tools, and they don't want you using your IRA or this tax tool to buy anything that you personally own or most of your family members own or live in or operate today. They want it to be new investments that are passive. And if you think about it, right, we'd all take our primaries and throw them in. We'd go through our, you'd pull out your short-term rental pool. And while I'm sure most of them are successful, we always have a couple of dogs, right? So we hold the dogs for the losses on our personal tax return, and we'd throw the home runs into our IRAs for the tax-free growth. And the IRS says, look, we're not even going to police it. We're just going to tell you if your name's on it in any way, shape, or form, or most of your, very immediate family members' names on it, it can never end up in your IRA.
Okay. Excellent.
Awesome.
Thank you.
You're welcome.
Super. You got any closing thoughts for today?
I would just highly encourage you all to check them out. To their points, it doesn't matter your age, however young or however old. It's a great, great retirement strategy. So, Jason, thank you so much for being on. We really appreciate it.
Thanks so much for having me. Really, really appreciate being here, and certainly enjoyed the discussion.
Absolutely. Yeah. Thanks, Jason. And thanks for being a sponsor for Bright Path Notes monthly broadcast that we do. We truly appreciate that as well. Yeah. Thanks for your time today. You're a very good speaker on this matter, and I can't wait to hear the next time you get up on stage and talk about retirement accounts, because I feel like I always learn something every time, or I forget something every time as well. So it's good to get that repeat knowledge. So check out newviewtrust.com, their website. Tons of information out there. Don't forget the video cast on this episode today. Episode number 8 is going to be on the Bright Path Notes YouTube channel and Elizabeth Mayora's YouTube channel as well. I'm Justin Bogard from Bright Path Notes.
And I'm Elizabeth with Elizabeth Mayora.
All right, Jason. We will see you next time, my friend. Bye, everybody.
Thanks,
guys.
Two Wealth Show is produced by Justin Bogard and Super E, sponsored by Brightpath Notes and Elizabeth Mayora. Thanks for listening and watching for our show.